Hi, I just wanted to go over some common misconceptions that we come across every once in a while. One of the first ones I'll address is that refinances are bad in general. This isn't the case a lot of the time. You can achieve a lot of goals that you're hoping to accomplish out of a refinance, whether that's lowering your interest rate and money that you're going to pay monthly, whether that's pulling equity for things like home improvement and debt consolidation. There's a lot of ways to use a refinance to benefit you in a significant way. The next common misconception that I'd like to go over is moving in term length backwards is a bad thing. That's not always the case. In certain situations, moving backwards can still benefit you. If you're dropping interest rates significantly enough, even moving backwards, your payment can start off lower with more going towards principal versus interest. If you're working with a great lender such as one as ourselves, you're able to actually stick to a term length that you specifically want. For instance, if you're 2 years into your 30-year mortgage, we can actually give you a 28-year mortgage to keep you on pace from where you're at now while still achieving the goals you're hoping to accomplish. Another common misconception we get for purchases is that you have to put 20% down in order to purchase a home. So that's not the case anymore. With conventional first-time home buyers, you can put as little as 3% down. With FHA, you can put as little as 3.5% down. And for some government programs, such as VA, you can finance up to 100% of your loan, which means you're putting 0% down. So another common misconception that we get are refinances are time-consuming. I get this a lot. I don't have a lot of time to do my refinance, or there's going to be so much documentation that I have to provide, it's just tough to do one. And that truly depends on who you work with. So make sure that when you're shopping for a home loan, the person that you work with is knowledgeable, trustworthy, and uses technology to their advantage. They should be able to get you through start to finish of a loan in approximately 2 to 3 weeks. The last common misconception that I wanted to address is it's always best to go to a shorter term length. The reason this may not be true is going to a shorter term length can increase your monthly payment. Now, if that's not something you're comfortable with, it may not be wise to put yourself into a situation that you can't easily reverse. So when looking for mortgage rates and terms, it may be wise to stick with the term length you're at, even if that requires you going back a year or two, if the rate is significant enough to drop, so that you can still save money and have a little bit of freedom with your payment, since there are no prepayment penalties on our loans. If you like my tips, please follow our page.